Hey everybody, my name is Kyla. Welcome to my channel where I talk about the stock market and the economy amongst other things. Today we're going to be talking about what happened with FTX and Binance, the events leading up to the event itself, and everything that is a big question mark after this has now happened. I'm going to link to everything below that I'm citing. All the sources cited will be cited below. So if you have any questions, please go check out those sources. Also, I'm sure Bankless will be talking about this in depth over the next few days, so make sure to go follow them as well. For a little bit of background, Binance and FTX are both crypto exchanges, number one and number two, basically. CZ is the CEO of Binance, and they actually helped to incubate FTX. FTX was founded by Sam Bankman-Fried, most commonly known as SBF, who is an effective altruist who has spent a lot of time in the political regulatory space over the past year or so trying to get a leg up for FTX. Because FTX kept on getting bigger and bigger, Binance decided to sell its stake about a year ago. As part of that buyout, they took about $2 billion in FTT, which is the token that FTX created for trading fees. FTX just got really big for its britches for kind of a good reason. They were able to raise $420 million from VCs, and it seemed like FTX was just going to take over the industry. A year ago, SBF was talking about buying Goldman Sachs. FTX was getting pretty big, and Binance was like, maybe not. CZ starved FTX of revenue with 0% trading fees on Binance, which basically drove a lot of volume from FTX to Binance. FTX makes a lot of money from something called Alameda, which is a research firm, a venture firm that executes pretty aggressive trading strategies, which enabled them, FTX, to bail out BlockFi, bid for Voyager, and also get involved with the situation over at Celsius. All of those firms sort of blew up because of what happened with Three Arrows Capital, Terra Luna, and so just shows a little bit of systemic risk. But it seemed like FTX was a powerhouse, so that they were able to step in and save everything. Everything was going okay for FTX, but then alarm bells began to ring with resignations from Beth Harrison, the former FTX president, and Sam Trabucco, the Alameda CEO, both stepping down. Sam also became increasingly unpopular because of his focus on regulation that was only really benefiting FTX. So all this kind of began a few days ago when Alameda's balance sheet was leaked. Alameda had $14 billion of assets against $8 billion in liabilities, and they had $3.6 billion in FTT, $2.16 billion in FTT collateral, about $3 billion in Solana, and then $134 million in US dollars, and then $2 billion in equity securities, which raises a lot of concerns about where those equity securities are located. So this FTT token can't really be sold off the balance sheet without causing a huge crisis, right? So 99% of this token is held by the top 1% of addresses, and the largest holder of FTT is, of course, Alameda Research. Basically, Alameda has the most exposure to FTT. Over $2 billion of Alameda's borrow collateral is denominated in FTT. And so what happened here, it seems like FTX gave a lot of this token to Alameda. Lenders allowed Alameda to use it as collateral, which is not great. So Alameda/FTX has loans collateralized with FTT. The whole question there is, are they gambling with retail money? And the next question is, does that make them insolvent? Dirty Bubble released a paper kind of analyzing this, asking the question, is Alameda Research insolvent? The whole thing here is that FTX and Alameda were trading FTT back and forth. CZ was like, okay, FTT might be kind of the next Luna. Like, I don't want to have exposure to that anymore. Also, I'm kind of sick of FTX. So CZ tweeted out that he was going to sell, which is a huge deal. And Alameda was like, whoa, chill out. Like, we could buy it all from you at $22, CZ. Like, don't sell that. And that tweet from ZZ sparked a liquidity crunch, which is not good. It caused essentially a bank run on FTX because people were freaking out. People were freaking out about FTT. FTT, this like highly illiquid token that Alameda and FTX were trading back and forth. Binance had a huge exposure to it because they helped to incubate FTX. And then CZ was like, I don't want to have this anymore. If CZ sold out of the FTT position, that would have caused essentially a nuking of FTX. Alameda was using FTT as collateral, so there was no way that they could have covered everything. CZ sparked this huge liquidity crunch, and Sam Bankman-Fried tweeted out, he's like, don't worry everybody, like it's gonna be fine. FTX was pausing withdrawals, everything was not fine, and it seems like SBF was going into Silicon Valley and Wall Street and saying like, hey listen, like we have to cover this big hole, can you help out? This was all yesterday on Monday, November 7th, and then today, November 8th, CZ steps in. He is going to officially acquire FTX. They can pull out whenever they want, according to the terms of the letter of intent. He caused this liquidity crunch through plans of selling FTT on the open market. But Sam Bankman-Fried tweeted out, things have come full circle, and FTX's first and last investors are the same. We have come to an agreement on a strategic transaction with Binance for FTX.com. So the question is, what is going to happen with Alameda? How is Alameda exposed? What does that mean? The thing is, FTX was in a position that they probably should have not been in. User funds were at risk, retail dollars were at risk, and that is just so irresponsible. There was a massive hole in FTX's books. Customer deposits are not supposed to be lent out. Now, the question is, well, did FTX violate the terms of service that they have with their users? Is there going to be a class action lawsuit against FTX? And then you have these VC firms like Sequoia who invested in this $420 million round at a $25 billion valuation. Paradigm invested $400 million at $32 billion in January 2022. The exposure here is pretty intense. What percent of Solana did Alameda own? Is Solana going to be okay? And so there's all these different questions that are now arising. What's going to happen? The VC firms are going to be fine, but like that's a huge hole to cover. Why was there such a huge hole to cover? Why were customer deposits being lent out? Why was Alameda trading this way? What is going to happen with other cryptos because of this? And now Binance is going to be king of the industry. What does that mean for an industry that's supposedly founded on the thesis of decentralization, right? And then also this equity securities exposure that FTX had. Who is that? Is that Robinhood? Is there going to be more dominoes tipping because of all of this? How is everything going to fall? Is there a deal? Why is there a balance sheet hole? Did FTX violate its terms of service? And of course, Coinbase has connection issues. The CFTC is looking at the situation. There's a lot of questions left, but that's kind of everything leading up to the event and the event itself. Pretty wild to, be tweeting out that FTX is fine. Then the very next day, sell in a fire sale, especially as an exchange that is supposedly, very big and supposedly supposed to be very solvent. I'm honestly at a loss for words. I'll link to everything below. Yeah, just be careful out there. Just be careful out there. Thanks so much for hanging out. Thanks so much for spending time with me. This is a rapidly evolving situation, but that's a little bit of background. So as more things come out, there's hopefully the context is helpful. If you want to go ahead and subscribe, that really helps. But yeah, see you all for inflation this Thursday. And I'll talk to y'all soon. Bye.